Hi there, it's July 2021. An update of the portfolio and the new stock I added to my daughter's dividend portfolio. How are you today? Welcome to my channel where you can follow my journey to set up and maintain a dividend portfolio for my 5-year-old daughter. I started buying dividend stocks for my daughter for at least $50 each month, starting January 2020. And next to that, I bought 0.01 Bitcoin, which is growing around 5% yearly. Watch the whole video to find out which stock I bought for July and why. July 2021, I bought the 19 dividend paying stock and will give an overview of the portfolio and the market in June. This month I will analyze and compare Pfizer and Janssen & Johnson. If you are new and like to follow my journey and see the dividend portfolio of my daughter grow, then please consider subscribing. I upload a new video each month at least. Let's do a small recap from my previous videos and discuss the market, the S&P 500, as well as Bitcoin and the portfolio in June. I have bought 18 dividend paying stocks. Along the way I got diversified along each sector according to eToro, the broker I use. I have ensured that there are dividend payouts each month. Actually, now the portfolio has at least $1 in dividend payouts each month, so I can invest this directly the next month in a new dividend stock. And what happened in June? The S&P 500 has a nice rise from 4,200 to 4,300. My portfolio overall did not do so well and had a decline from 19.1 to 70.3%, but still in the green. Approximately 2/3 of the dividend stocks went down. Noticeable is GPC, which went down 5% this month. Also, PPG Industries even went down around 10% since last month. But remember that in the last 3 months, both PPG Industries and GPC went up around 10% each month. On the other side, Microsoft, it went up around 9% in June, and the other stocks did not move that much. And Bitcoin? Quite a volatile month again, but not like last month. And from the start to end, down a bit, from 37k at the start of June to 35k at the end. And nonetheless, BlockFi gave a nice interest which resulted in an additional 4,020 Satoshi. And with the received interest of the previous months, it now totals to 1,006,442 Satoshi. If you are interested in BlockFi, where you can open an interest account and buy Bitcoin, you can use the link below. It gives a $10 bonus when you invest $100 or more. And next to the Satoshis, I received 9 dividend payouts in June. Sherwin-Williams, Atmos Energy, Microsoft, 3M, PPG Industries, McDonald's, Waste Management, T. Rowe Price and Pepsi, which totaled in $1.92. I noticed that next to the dividends, $2.30 was added to the portfolio. A little research learned me that I received a special cash payout as a payment by Merck on the supposed to be Oregon shares that I entitled to receive because Merck splits its women's health business into Oregon Corporation. However, since Oregon is not yet listed in eToro, they gave a cash payout instead. So this and the dividend payouts totals in $4.22. And of course, this will be added to the stock to buy in July, along with the $50. Now let's take a look at the stocks I will examine and why I chose these two. As I mentioned in the beginning, I choose to examine Pfizer, ticker symbol PFE, and Janssen & Johnson, ticker symbol JNJ. I know that I compared these two before, along with Cardinal Health in December 2020. And Cardinal Health came out on top, still with the highest scores I got since I started with a 6.5 out of 7. But thinking about what stocks to choose from, I realized that in June, my wife and I got vaccinated against COVID-19. My wife got the Janssen vaccine from Johnson & Johnson, and I got Pfizer. So why not compare them head to head and buy one of them? Do you like how I work and want to buy the same stocks now and in the future as part of your portfolio with no effort? You can make an account by eToro and copy my trades automatically by using the copy trader feature. Of course, at your own risk, I am not a financial advisor. So let's start with analyzing these companies. And first, we take a look at what these companies do in short. Pfizer is one of the world's largest pharmaceutical companies and develops and produces medicines and vaccines for a wide range of medical disciplines. Of course, making a successful vaccine against COVID-19, the one I got, the first shot, that is, in June. Johnson & Johnson is an American multinational corporation that develops medical devices, pharmaceutical and consumer packaged goods. A huge company that includes around 250 subsidiary companies, among others the Janssen, a Johnson & Johnson pharmaceutical company, which is responsible for the vaccine my wife got against COVID-19 in June. So let's look a bit closer to these two different stocks and analyze them using the 7 steps. The first step is to look at the dividend yield, the annual dividend paid divided by the stock price, and this multiplied by 100 to get the percentage. A yield between 3 and 7% is considered to be a good catch. The dividend yield of Pfizer is 4% and meets this criteria. And the dividend yield of Johnson & Johnson is 2.5%, which does not meet this criteria. The second step is to check the dividend growth of over 10 years or more, a sign of a solid dividend and a feature that is attractive for dividend investors. Pfizer has 11 years of consecutive dividend growth, and Johnson & Johnson has a massive 59 years of growth. And so both meet this criteria. The third step is to look if the payout ratio is under 70%. The dividend payout ratio is the amount of earnings paid out in dividends. The dividend payout ratio is ideally under 70%. You do not want a company that pays almost every cent they earn to dividends only. That is too risky. Pfizer pays out 42%, a great number, and Johnson & Johnson pays out 44% out as dividends. So both meet this criteria. The fourth step is to look at the 5 years dividend CAGR. The dividend CAGR, or compound annual growth rate, is a fast way to measure the dividend growth. Numbers you would like to see are 7% or more. If that is not met, then add the previous mentioned dividend yield. If they add up to 9% or more, then it's still okay. Pfizer has a growth rate of 5.8%, and Johnson & Johnson has a growth rate of 6%. Both do not meet the first step of the criteria. When the dividend yield is added, only Pfizer meets the second step of this criteria. The fifth step is to check the trend of the dividend yield, a way to check the ratio of the stock price and the dividend payout over the years. You would like to see an uptrend where the dividend payout rises more than the stock price. I'll just check the last 5 years. Although the data of Pfizer shows a hiccup, in the data of 2020, you can see a flat line or a slight uptrend, which is not good but not bad either. Johnson & Johnson shows a downtrend, so not so good for this criteria. The sixth step is to look for the year-over-year trends of the revenue of a company. Johnson & Johnson performs quite well and has an increase every year very well. Pfizer has one decline, so not bad but not really good either. The last step, number 7, is looking for increasing year-over-year cash flows. Johnson & Johnson again performs quite well and has an increase every year. Pfizer has a decline only in the first year, so not good but not bad either. Now, let's take a look at an overview of the steps and the results. Pfizer meets the criteria for step number 1. Johnson & Johnson does not meet the criteria for the dividend yield and is below the 3%. Both stocks meet the dividend growth of 10 years or more, step number 2. Both have a great dividend payout ratio and meet the criteria in step number 3. Pfizer meets the criteria of step number 4, the 5 years dividend CAGR, only when the dividend yield is added. Johnson & Johnson, however, does not. Step number 5, the trend of the dividend yield. Pfizer is stable or maybe a slight uptrend, so not good but not bad either. Johnson & Johnson does not meet this criteria. For step number 6, the year-over-year trend of the revenue, Johnson & Johnson meets this criteria, and Pfizer is not good but not bad either. And for step number 7, the increasing year-over-year cash flows, is quite similar as step number 6. Johnson & Johnson meets this criteria, and Pfizer is not good but not bad either. And if you rate all these steps with a 1 for good, a 1/2 for not so good but not so bad either, and a 0 for bad, then Pfizer has a score of 5 points and Johnson & Johnson 4 points. So I'm happy with both companies producing vaccines, but for investing, Pfizer shows just a bit better numbers than J&J. Remember, I am not a financial advisor. This is for entertainment and a bit of educational purposes only. Any investment has risks, so do your own research. And so I found my stock to buy for July. And when the market opened on the 1st of July, I bought for $54.22 Pfizer, ticker symbol PFE. If you like this video, please consider liking or sharing this video and subscribe if you haven't already. It helps me to grow this channel. Thanks for watching and see you next video.